We've passed the point of maximum global growth momentum, so things are starting to slow. So we've gone from a story of synchronized global growth to one of more divergence, where we're seeing continued U.S. strength and the rest of the world weakness, and that's causing us to take down risk on the margin in our portfolios. We've mainly been trimming in emerging markets, and we're focusing on U.S. assets and especially domestically oriented assets, which are exposed to that continued strength in the U.S. economy.
I believe the two biggest decliners have been Boeing and Caterpillar, and that has to be a reflection of the concern that's taking place with the trade turmoil. Do you think that that is overdone, or do you think that that is warranted?
Well, I think it's going to be a tough summer. I think U.S. markets are going to hang in there, and of course, the globally exposed segments will underperform the domestically oriented ones.
But I think you're talking about two very specifically that if we get into a trade war, there's going to be retribution that will probably very likely fall on Boeing and Caterpillar. If we don't get into a trade war, maybe they're a bargain here, and that's a pretty tough call to make right now.
True, and a full-blown trade war is not in our base case scenario, but the continuation of trade tensions is something that we're likely to see over the summer. And I think that's why you're going to see markets range trade, but you're going to see U.S. markets do relatively well compared to emerging markets and EFA markets.
Which is why we've seen the Russell 2000 do so well.
Exactly. And that's a call that we've made. We started adding to small caps back in March. We wrote a piece a couple of weeks ago that it's small caps turn, and we think that trend has legs.
Dory, let's talk a little bit about what's happened with the banks in the stress test. Andrew mentioned earlier we saw all 35 of these big banks pass the stress test, but we're still waiting to hear what happens on the buybacks and on the other plans that they might have. What are your thoughts? What do you expect that we will hear?
I think you'll hear good news. First of all, we've added $800 billion worth of capital since the crisis. And our banks look great. They look very good. It doesn't mean they don't have risk, and it doesn't mean that credit's getting a little bit more competitive out there. But other than, say, Goldman, Capital One, and State Street, everyone came through with flying colors. And those three still passed.
You think Goldman, though, is not going to be able to do anything too interesting on the dividend or buyback side? What about Morgan Stanley?
Morgan Stanley maybe so, but they did better than Goldman.
Do you think Goldman? What's going to happen there?
It'll be interesting. Goldman's Goldman, so we'll see what happens, but they're certainly not going to have the flexibility that the others do. I think the interesting thing that comes through on that is the comparison to, say, like Deutsche Bank and some of these other banks around the world. Deutsche Bank got downgraded by Fitch, and they've already been downgraded by S&P, and they run about 3.6% capital. They never added enough capital since the crisis, so a lot of these European banks and world banks still need more capital.
Meaning what as a reflection of our banks versus them when you look at the stock prices?
Well, I feel a lot more comfortable in our banks. All banks entered the crisis, way too leveraged off balance sheet. They cut that down, and they all had a lot lower capital. But our banks have doubled the capital since the crisis, and they have double the capital. It's like a B of A or Citigroup has double the capital percentage that a Deutsche Bank does. Mm-hmm. They need more capital, and that makes me feel more comfortable as an investor because a downturn is going to come.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.